Hello everyone, I hope you are well. In this video I'm talking about the latest RBA decision on increasing the cash rate and its impact on the Australian economy and the property market. So let's get into it. On 6th of September, RBA's board decided to increase the cash rate target by 50 basis points to 2.85%. It also increased the interest rate on exchange settlement balance by 50 basis points to 2.25%. Inflation in Australia is the highest it has been since the early 1990s and is expected to increase further over the months ahead. Global factors explain much of the increase in inflation, but domestic factors are also playing a big role. There are widespread upward pressure on prices from strong demand, a tight labor market, and capacity constraint in some sectors of the economy. Inflation is expected to peak later this year and then decline back towards the 2-3% range that we had. The expected moderation in inflation reflects the ongoing resolution of global supply side problems, recent declines in some commodity prices, and the impact of rising interest rates. Medium-term inflation expectations remain well anchored, and it is important that it remains the case. The bank's central forecast is for CPI inflation to be around 7.75% over 2022. The Australian economy is continuing to grow solidly and national income is being boosted by a record level of the terms of trade. The labor market is very tight and many firms are having difficulty hiring workers. The unemployment rate declined further in July to 3.4%, the lowest rate in almost 50 years. Job vacancies and job ads are both at very high levels, suggesting a further decline in the unemployment rate over the months ahead. In addition, some increase in the unemployment rate is expected as economic growth slows. Wages growth has picked up from the low rates of recent years, and there are some pockets where labor costs are increasing briskly. Higher inflation and higher interest rates are putting pressure on household budget, with the full effect of higher interest rates yet to be felt in mortgage payments. Consumer confidence has also fallen, and housing prices are declining in most markets after the earlier large increases. In addition, people are finding jobs, gaining more hours of work, and receiving higher wages. Many households have also built up larger financial buffers, and the saving rate remains higher than it was before the pandemic. The further increase in the interest rate will help bring inflation back to the target and create a more sustainable balance of demand and supply in the Australian economy. Price stability is the prerequisite for a strong economy and a sustained period of full employment. So the size and timing of future interest rate increases will be guided by the incoming data and the board's assessment of the outlook for the inflation and also the labor market. According to RBA's full report, it seems that the economy is in a solid and good position at this stage, but it is expected that the economy slows, the unemployment rate grows, and it's also going to impact further on the property prices. So it is not a very happy time for people who are looking for capital growth in property market, but on the other hand, it can provide a very good opportunity for people with money and a good borrowing capacity to secure good deals. So what is your position? Are you happy with all these interest rate rises or you're just unhappy?